When I was young, I used to sit beside my father as he looked through his investment portfolio. There were pages filled with the names of real companies, share certificates, and numbers I didn't fully understand. I was too young to know how the stock market worked. But I understood one thing. This was how adults built wealth. Years later, when I finally had my own money to invest, I didn't buy a single stock. I didn't call a broker. I didn't open a brokerage account. I bought Bitcoin. Looking back, that one decision quietly mirrored what millions of young Africans would eventually do. We didn't enter the world of investing through Wall Street, we entered it through crypto. Not because we hated traditional investing, not because we believed Bitcoin was guaranteed to make us rich, but because crypto arrived before traditional investing ever truly reached us. And that raises a much bigger question. How did an entire generation learn about investing through Bitcoin instead of the stock market? Because this isn't just Africa's story anymore. It could be a preview of how the next generation around the world enters finance. When most Western media talks about crypto adoption in Africa, the headlines almost always focus on the same things: scams, speculation, people trying to get rich overnight. Those stories certainly exist. But after spending years in the crypto industry, I've realized they completely miss the bigger picture. The real story isn't that Africa fell in love with crypto. The real story is why. According to Chainalysis, Sub-Saharan Africa has consistently ranked among the world's fastest-growing regions for grassroots crypto adoption. Not because governments were buying Bitcoin, not because giant investment firms moved in, but because ordinary people did. Students, freelancers, small business owners, young professionals, people who simply wanted a better financial opportunity than the system around them could offer. To understand why this happened, we first have to understand something most people outside Africa never think about. Imagine you're 22 years old and you've just started earning your first income. If you live in the United States, Canada, the UK, or Australia, investing is usually straightforward. You open an account with a brokerage platform, connect your bank, buy a stock, maybe Apple, maybe Microsoft, maybe an S&P 500 index fund. The process isn't perfect, but the path is clear. Now imagine growing up somewhere that path isn't nearly as obvious. Many young Africans had never met anyone who owned shares in publicly listed companies. Many were never taught how stock investing worked. Traditional investing often felt distant, complicated, like a financial world built for someone else. The investment ladder existed, but reaching the first step wasn't always easy. Then something unexpected happened. Bitcoin appeared. It didn't arrive through banks. It didn't arrive through financial advisors. It arrived through smartphones, through YouTube, through WhatsApp groups, through Telegram communities, through friends sending screenshots of their first profits. For the first time, participating in a global financial market didn't feel like joining an exclusive club. It felt like downloading an app. Create an account, verify your identity, buy a small amount, and just like that, you were an investor. That simple experience changed everything. Crypto wasn't replacing Wall Street for millions of young Africans. Wall Street had never really introduced itself in the first place. Crypto became the first door that actually opened. Then came 2021. Every financial generation has one defining moment. For millions of young Africans, 2021 was that moment. Bitcoin reached new all-time highs. Ethereum exploded. New cryptocurrencies seemed to appear every week. Suddenly, everyone knew someone making money from crypto. University students discussed Bitcoin between lectures. Office workers talked about Ethereum during lunch breaks. WhatsApp groups that once shared football highlights suddenly became filled with crypto charts and portfolio screenshots. I watched people who had never invested a single dollar in their lives suddenly become fascinated by financial markets. Not because they suddenly loved economics, but because for the first time investing felt accessible. Bitcoin had stopped being just another digital asset. It had become part of internet culture. And once something becomes part of culture, it spreads much faster than any advertising campaign ever could. But every financial revolution comes with a price, and for this new generation of investors, That price was about to arrive. By the beginning of 2022, the excitement that had defined the previous year started to disappear. Bitcoin began falling, Ethereum followed. At first, many people believed it was just another temporary correction. After all, crypto had recovered before. Why wouldn't it recover again? But this time was different. The losses kept getting worse. Then one of the biggest disasters in crypto history unfolded. Terra, an ecosystem once valued at tens of billions of dollars, collapsed in just a few days. Investors watched fortunes disappear almost overnight. Some people lost years of savings, some lost money they had borrowed. Some lost money they simply couldn't afford to lose. And before the market had time to recover, another shock arrived, FTX, one of the world's largest cryptocurrency exchanges, a company trusted by millions of users, supported by celebrities, advertised during major sporting events, viewed as one of the safest places to hold crypto, collapsed. Billions of dollars in customer funds vanished. For millions of first-time investors around the world, this wasn't just a market crash, it was their first lesson in financial risk. I watched people around me go through every emotion imaginable: disbelief, denial, anger, regret. Many had entered crypto believing prices only moved in one direction. Now they were experiencing something every investor eventually learns: markets don't only reward, they also punish. And sometimes, they punish brutally. Ironically, this painful period may have produced something far more valuable than another bull market. It created a generation that actually understood investing. Before the crash, many people only asked one question: what coin should I buy? After the crash, the questions changed. Who built this project? How does it make money? Is this sustainable? What risks am I taking? That shift changed everything. People began reading white papers instead of social media posts. They started learning about market cycles, diversification, risk management, long-term investing. Many discovered that investing isn't about getting rich next month. It's about making good decisions for many years. The education was expensive, but it was real, and no classroom could have taught those lessons the same way. This is why I believe the most important thing crypto gave millions of young Africans wasn't Bitcoin. It was financial curiosity. It made people ask questions they had never asked before. How do markets work? What causes inflation? Why do currencies lose value? How do assets create wealth over time? Those questions eventually lead beyond crypto. Many people who entered through Bitcoin later learned about stocks, ETFs, bonds, real estate, business ownership. Crypto didn't replace investing, it introduced investing. And that's a huge difference. What's even more interesting is that this pattern isn't unique to Africa. You can see similar stories in Vietnam, Indonesia, Pakistan, parts of Latin America. Anywhere traditional financial systems struggled to keep up with a young internet-connected population, crypto often became the first investment they ever made. Africa simply became one of the clearest examples. For decades, experts believed there was only one path into investing: go to school, get a job, open a bank account, open a brokerage account, buy stocks, build wealth. But an entire generation quietly took a different path. They downloaded a crypto app. And whether that decision made them money or not, it introduced millions of people to the idea that they could participate in global finance. Looking back at my father's investment portfolio, I finally understand something I couldn't understand as a child. He wasn't teaching me how to buy stocks. He was teaching me that investing matters. My generation simply learned that lesson through a different doorway. His doorway was the stock market. Mine was Bitcoin. And perhaps that's the biggest story crypto has ever written. Not that it created millionaires, not that it challenged banks, but that it convinced millions of ordinary people that investing wasn't only for the wealthy, it was for anyone willing to learn. The generation that discovered investing through Bitcoin is still young. Many will eventually own stocks, many will start businesses, Many will build wealth in ways they never imagined when they bought their first fraction of Bitcoin. The question is no longer whether crypto changed Africa. It already has. The real question is this: will history remember Bitcoin as the investment or as the teacher that introduced an entire generation to investing itself? If your first investment was crypto, I'd genuinely love to hear your story. Tell me in the comments. Because this documentary isn't just about Africa, it's about every person whose financial journey began with a single tap on a smartphone. This is CoinGazetter. Subscribe because the biggest stories in crypto are rarely about the coins themselves. They're about the people whose lives those coins changed.